All right, P&G out with its latest earnings report. Let's get right to P&G Chair and CEO John Moeller. John, always great to get some time with you. I know time is indeed scarce with someone in your role. Talk to us a little bit about the quarter here. I think the street might be locking in on some below expectations on the organic sales growth of 2%. What did you see as the quarter progressed in terms of the U.S. consumer?
Yeah, well, first let me just back up a little bit. This quarter marks the end of the completion of our fiscal year. We went into the fiscal year guiding to a 4 to 5% organic sales growth rate. We delivered 4. The core earnings per share guidance was 6 to 9. We delivered 12, which is 16 on a constant currency basis. Free cash flow productivity, the guide was 90%. We delivered 105, which allowed us to increase the dividend 7%. The 134th consecutive year this company's paid a dividend, the 68th consecutive year we've increased the dividend. The quarter that we just completed was a little bit softer than the prior 3, primarily due to some one-time events that should annualize as we go through next year. So as we transition to next year, we're again guiding to 3 to 5 on the top line. That's organic sales, core earnings per share of 5 to 7%, and again, 90% free cash flow productivity.
We've seen some recent reports that the U.S. shopper is becoming more discerning. And maybe they're not in Walmart or Target splurging for that extra item. Have you seen a more cautious shopper?
Not really. I don't doubt that some shoppers are more cautious. That would make sense. But if we look at a couple things, a couple data points that we have access to, one is the volume share of private label, which is kind of a proxy for trade down in our categories. It's really unchanged versus both pre-pandemic periods and the last couple of quarters. The other thing that I look very closely at is our unit volume rates. And in the U.S., the past 5 quarters, they've been +3. This is versus a year ago. +3, +3, +3, +4, +3. So it's hard within those 2 data sets, at least, to conclude that there's a significant amount of trade down.
Within that full year guidance, John, it does look like you're looking for a reacceleration in organic sales versus what you saw in the fiscal fourth quarter. Within that guide, are you planning any more consumer promotions just to get volume reaccelerated and headed in a different direction?
Well, as I indicated, volume's in pretty good shape. I just gave you the U.S. figures. In Europe, we see the same thing. So past 4 quarters, volume versus a year ago, +2, +3, +4, +3. I can't talk about future plans as relates to either pricing or promotion. But what I will tell you is if we just look at the last quarter as indicative potentially of the future, promotion and volume sold on promotion was still at about 85% of pre-COVID levels and about at the same level as it was the prior quarter, the third quarter. So at least as plans have played out thus far, we haven't needed significant increases in promotion to keep that very strong volume growth.
I was surprised, John, about the call out in the inflation hit for the full fiscal year, $500 million. I thought inflation was coming down.
Well, that number last year would have been a much higher number. So on a relative basis, you're absolutely right. It is coming down, but we still see a modest amount of inflation. Think, for example, about wages as one driver of that.
Is there a way that you're looking at it from a management perspective to find more productivity inside the business to offset some of that inflation?
Absolutely. Absolutely. And, our fundamental business model is centered on innovation in daily use categories where performance drives brand choice. So increasing that performance increases the overall value proposition for consumers without necessarily, though sometimes we'll introduce some without necessarily pricing. The value proposition is a combination of price, efficacy, usage experience. It it encapsulates the entirety of consumer delight. And we're working on every one of those vectors. And as you rightly point out, holding costs as low as we can.
Of course, P&G is a global company, and correct me if I'm wrong, China's about 10% of your business. What are you seeing in China? Because a lot of folks that I've been talking to lately, sounds like quarter over quarter, the economy there worsened, sales trends worsened. What is P&G seeing?
Some of the same. It's slow. We have very strong expectations for the midterm and the long term, but have accepted the short-term reality that things are going to be slower than they were from a growth standpoint, certainly than pre-COVID. So, for example, in the quarter we just completed, a big driver of the numbers we talked about was, in fact, China, where sales were down 9%.
John, I think you and I have been talking for, I don't know, about a decade. And I was thinking back to your time as P&G CFO for what, 12 years? So I think you're equipped to handle this one. How impactful have lower corporate taxes been to a company like P&G the past few years?
Incredibly impactful. And that element of the dialogue is going to increase as we get through the election and start talking about 2025, when some of the tax provisions that were passed in 2017 sunset. But if you just look at our investment in the U.S. pre and post the 2017 Act, it's up significantly. Our employment is up significantly, and importantly, our taxes, the taxes we're paying to the U.S. government, are up significantly. So it's really led to significant economic activity in this country. We've invested more in terms of capital spending, manufacturing facilities, et cetera, in that period of time than we did prior to that. So it's an important economic driver, and we'll be working to make sure that that's well understood.
If those tax cuts are not set in stone again or carried over, does that impact, or will that impact, how P&G invests in its business, especially here in the U.S.?
On the margin, it will certainly have an impact. Every decision that we make is based on present value of discounted cash flow, and that's on an after-tax basis. And so it begins favoring, on a comparative basis, other locations for investment. So yes, it will have an impact.
That's why I love talking to you, John. You know every single thing about P&G, every line item, every number. There's nothing. You're just at the top of your game, as always. We'll leave it there. Good luck for the rest of your earnings day. P&G Chair and CEO John Moeller, always a pleasure to snag some time with you. We appreciate it.
Thanks so much.